Well, hello YouTube, Louie here, and this is an update on my silver covered call transaction. I closed that out yesterday for those of you that have been following it. What I'm going to go quickly here because I've already done this video a couple times, but this is the final accounting of the rather profitable silver covered call. What I did back around this period here when silver was at a low is I bought 1,000 ounces of the SLV and I wrote covered calls on them. Okay, and we've been watching the price of silver spike up. Well, yesterday, the 17th, I closed that contract. The options were expiring in the money and sold my 1,000 ounces. So let me show you how that worked out. Here is the transaction. SLV trades about $1 less than the silver spot price. But like I said, a few months ago, I bought 1,000 ounces at 13.58. Okay. At the same time, I sold covered calls, 10 contracts, equals 1,000 shares of the SLV at $540 with a strike price of 14. Okay, so yesterday, SLV had exceeded that strike price by 55 cents, so we had a nice run in silver, which represented nearly $1,000 profit on the 1,000 shares, right? $970 when I closed it out. Cost me $10 from between the buy and the sell. Cost me $10 on E-Trade to do that sale, and I netted a $960 profit. All right. At the same time, the SLV calls that I sold for 54 cents a share. And that was a sale of $540 when they were out of the money and the strike price was above 13.58. All right. So yesterday I terminated, I bought to cover those covered calls. They were in the money, so still had a value of about 55 cents, which represented the premium, the in the money portion of the covered call. So I bought that back at $550, giving me a $10 loss on the covered calls, less commission of about $20 buy and sell, so a net loss of $30 on the covered call. So how did that profit net out? $960 profit on the SLV, minus the $30 loss on the covered call that I had to buy back. And that gave me a net profit of $930 on an investment of about $13,000. That is about a 7% return. Okay, so that worked really well, and I'm fixing to do this again. I think I will keep doing this, but right now silver has topped around the SLV has topped around 1574. I'm sorry, the SLV has topped around 1455. Silver spot has topped around 1575 or so. So yesterday I sold, like I said, I covered that call and sold that option within a minute to make sure I had no risk of loss on the underlying 1,000 shares. Now I'm back to cash, and what I'm looking for is a retracement here. I'm going to set my alerts somewhere around here, 1475 to $15. Let's see. 50% between 1475 and 1575, got 1525. Somewhere between 1525 and 1475, I'll be looking to re-enter that trade and sell more covered calls. Again, I think silver is a pretty safe investment here. I think it is going to resume its uptrend. But right now it looks like we have pressure to bring it back down, and that's why I'm back in cash. So that worked really well for those of you that want to give this a try. SLV on E-Trade can be purchased, and the options can be found in the E-Trade screens to sell those covered calls. I would never write a naked call or sell a naked call because I just don't want to be exposed to that kind of risk. So the real risk in selling a covered call is if you drop significantly below the price you paid for the silver, and you drop below the premium you got for selling the covered call, which gives you a solid 50 cents of protection on the downside. But I think if we get back in right around here, somewhere, 14.75 or so, $15, I think there will be great opportunity to do this once again, and worked out really good. So I thought you guys would want to know the upshot. And back to the accounting. Nice, huh? 930 bucks. What is that? About 60 ounces of silver. So cool, man. I'm gonna keep doing this. Okay, you guys follow along. If you want to see the next one, I'll let you know when I enter the next contract. And I'm not a financial advisor, and do this at your own risk if you choose to. But anyway, cool, huh? Okay, guys, talk to you later.